Hi, I'm Tina Marie Parker of Business Advisors and Troubleshooters Nozey Parkers, and today I'll be talking you through how to set up a simple cash flow forecast. So what is a cash flow forecast? It has two parts, incoming cash and outgoing cash, and I will talk you through the key elements today. So, firstly, decide if you need to monitor cash on a weekly or on a monthly basis. I advise our clients to set up a weekly forecast because so much can change in a month, and a weekly forecast gives you greater insight. If your budget cannot stretch to having a piece of software that manages cash flow for you, then just use a spreadsheet. If you'd like to get in touch, our contact details will appear at the top of the screen throughout this video. So let's begin. Create and label a column for every week. Now we'll look at cash coming in. This is recorded in the top part of the cash flow forecast. Using your aged debtor report or the list of outstanding invoices, work out how long after invoicing it usually takes for each customer to pay you. You may need to go back over your records to be able to work this out. Work out a total figure for all debts. Put the funds due in from your customers or clients in the columns that you think you'll receive the funds into your bank account. However, if there are any customers with large balances owing, put them in a separate row on the forecast and enter the balances due into the likely weeks column they will get paid. If you have recurring invoices or invoices that are raised each month for the same amount, you can create a row for these as well. Do you have any orders or quotes you are likely to win on your books? If so, work out when you are likely to fulfill these orders or complete the work, and also when you will be sending out your invoice, preferably by email because it's much quicker. Then calculate when you're likely to get paid for these orders. Create a new row and enter the amounts you'll get paid in the right week's columns. Do you have any additional sources of income, say a bank loan? Yes, you've guessed it, add another row and put the amounts in the relevant columns. Now add up all your income. This will show you how your income will come in every week over the next few months. Now for the second part of the cash flow forecast, your outgoing cash and expenses. Use your aged creditor balances or a list of supplier invoices that are due for payment and work out when you will pay them. Create a new row and enter these figures in the appropriate column in the forecast. Are there items that you have ordered or suppliers that you have not invoiced due yet? Create a new row for these and enter the amounts in the columns when you will most likely pay them. Do you have any standing orders or direct debits that are going out of your account? Look at your bank statements or online banking to see what came out of your account and when. Create a new row for each standing order and direct debit in your cash flow forecast and note what day each leaves your account. Be careful here. Check that you aren't double accounting. Some of your supplier invoices might appear on your aged creditors report, but could also be paid by direct debit and standing order. Any credit cards or loans? Again, create a row for these and put the amounts in the correct column. Now for payroll. Put the net pay figures, that is the amounts that gets paid to your employees, in when they go out of your bank account. The PAYE and National Insurance contribution figures need to go in between the 19th and 22nd of the month, depending on how you pay them. And don't forget HMRC. Enter any corporation tax and VAT in the right columns too. Do you have any other outgoings? Bank loan repayments? Yes, time again to create a new row and enter the figures. Now calculate the columns totals for all your outgoings. Now obviously when you do your cash flow forecast there will be a lot more entries on your final cash flow forecast, both for your income and your expenses, but this should give you the idea of how to put a simple one together. Finally, the calculation part. Include a row called opening balance. Enter the opening balance figure from your bank statement in the first box in this row. Then underneath include a row called closing balance. Now here's the important bit. Your closing balance will be as follows for each column. Your closing balance equals your opening balance plus your incoming cash minus your outgoing cash. Carry forward the closing balance figure for each column into the opening balance cell of the next column. You can then copy the formulas across and do any necessary tidying up of the spreadsheet. You can see that in this week there is a problem. So here you may decide to delay some of your supplier payments from the previous week. Then you can tidy up your cash flow. You will need to manage your cash flow and update it as money goes in and out, and add more columns as you go. And personally, I think a 3-month weekly forecast works really well for most businesses. That example was a very simple cash flow forecast. As I said earlier, you may decide to use a software package for calculating your cash flow forecast, if budgets will allow. In this video, I've talked you through the key elements of a simple cash flow forecast. Please see our channel for other video blogs. Get in touch to find out how we can help you achieve success for your business. Please call now to find out more about our support services. That first consultation is free. I'm Tim Parker of Nozey Parkers. Thank you for watching.